Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. This channel talks a lot about commodity type investments, or anything that's undervalued. I'll go over it. I'll take a look at it. I'll even talk about even some renewables if I think they're worth talking about. Um, Give me a thumbs up for this content. Leave comments below. If you guys have any comments on anything, I'm going to go over investing trends. And investing trends are important because if you can identify a trend early and whatever investment is cheap, that's a perfect opportunity to make a lot of money. Is you buy it when it's cheap, and then the trend comes and you ride the trend higher. So I think there's some things, some trends that I see that I'd like to share with everybody. And if you agree with these trends, there might be some potential investments that you can check out. So I'm going to go over these investing trends and what I see in the market. So the trends I see is obvious: increased electricity demand. I see increased battery manufacturing. I see increased copper usage for electric vehicle cars and new homes being built. I see nickel demand increases for battery electric vehicles. I see platinum group metal demand increasing from higher emissions standards around the world. I see inflation coming pretty strong, and I think rising bond yields will be a result unless they hold them down with yield curve control. I see increase in oil demand from recovery and world automotive sales. Recovery being from COVID worldwide. As things get back to normal, I think oil demand will increase in the short term, and even in the long term, I think it's going to remain pretty robust. Where I think demand may go down a little bit is in the developed countries. So investing is about probabilities. It's not about certainties. It's not about taking my money and dumping it into one sector in one company and trying to get it right through analysis. That's not. So many things can happen. Your risk would be too large because all it takes is some country to say, well, we're going to nationalize it, and then you're just done. So my approach is to identify the highest leverage sectors that are the best value. I look at trends of increasing demand and deficits in terms of minerals in the future for those sectors, and then I spread out bets amongst highest probabilities using portfolio investment allocation strategy of about 2 to 3% of portfolio size position sizes. I can go a little bit more, maybe up to 5%, but that's kind of where I cap myself. And then I also look at physical precious metals. I then take a portion of my money and invest into physical precious metals. Somebody was asking this, my current percentage is about gold 10%, silver 60%, platinum 30%. Just by happenstance in the duration to accumulate these metals, it turned out that way. I did have some palladium, but I swapped it to platinum, and I did have more gold, which I swapped to platinum to get the platinum to 30%. Again, I had more silver opportunities to accumulate cheap with people selling silver as more people hold silver. So I had more access to silver, and that's why silver's higher than platinum. I just got better deals. And if someone's going to give me a deal, I'm not going to say no. I like silver and platinum the best over the years because of many reasons. Those many reasons are typically rooted in the next slide. So the physical precious metals reasons and why I focus on a couple of these metals is silver is the number 2 commodity in the world behind oil. Its uses, so its value. So these uses in society provide value to the world, and silver has very good value or unparalleled value in some cases with technology, bacteria, etc. that can't really be substituted out. It's basically the properties of the metal itself which gives it that leg up over many other materials. Platinum's uses are increasing in society. It's adopting more and more uses than just emissions regulations and doing emissions type catalytic converter demand. Its rarity and many uses is what draws me to platinum. The PGM metals are used in emissions and will increase going forward their loadings per catalytic converter. So I do think that platinum group metals as a whole will go higher. That's rhodium, platinum, and palladium is what I'm referring to. We have inflation coming. Platinum is a very good inflation hedge. So is silver. And I see declining ore grades and declining energy returns. to get more energy for these metals. It's going to be more difficult to get them out of the ground. And when you hold them physically, you are in a position where you're going to have rising prices. And perhaps or perhaps not, the mining companies may or may not make more money mining them out of the ground, depending on energy costs and the ore grades that they have. But if you own it physically, that stuff doesn't matter. So positioning for success, I'd say the general increase in demand for all platinum group metals. And in my opinion, platinum is a substitute to higher cost palladium. So I like platinum quite a bit. We have fuel cells where platinum is used, and a ramp up of production of these will increase demand for platinum. A lot of countries cannot adopt battery electric vehicles because of their electrical infrastructure. So they're going to have to either go with internal combustion engine vehicles or a fuel cell vehicle. Catalytic converters will still be used for many years. And again, inflation protection is in the backdrop that I'm looking for in these types of investments. And if you're going to go physical, platinum is one of the best inflation hedges. So that's another reason I like platinum. And silver is obviously is good too. So the overall trend here is what I'm seeing is that money's going to rotate from overvalued to undervalued commodity sectors. Overvalued being like Dow, S&P 500, and it's going to happen slowly over time. It's not just going to all happen at once. And technology companies a lot of those are overvalued as well, given where interest rates are. There's going to be a green energy push, and eventually logic will push demand towards, I think, nuclear energy, which they use uranium as a fuel. So the uranium mining companies, I think, will be very good bets. Demand for oil will only slightly slow worldwide, if any. It's going to take longer than most people project. I don't think we are all just going to start, driving EV vehicles in 10 years. I don't see it. Ore grades and minerals will decline and get harder to extract. That's why I prefer royalty companies and physical precious metals. So that's kind of where my preference is, to hedge against declining ore grades and increasing energy costs. So that is kind of the summation of the overall trends of what I see. And I think we have incredibly large opportunities here for certain metals, for certain sectors. And I think oil, uranium, copper, nickel, platinum, silver, I mean, these things 10 years out, I think they'll do very well. I don't think they can substitute these metals as easily as some people think. It's going to take a lot of research and development. It's going to take a lot of figuring out how to manufacture these things. It just takes a lot of time. And right now, these are the best that we know of. I don't think there's too much graphene out there that's just going to walk right over these things in the next 5 to 10 years. So I think it's going to take time to develop. It's going to take engineering work and whatnot to integrate all this stuff, and manufacturing methods and standards to develop to really roll out new substitutes. If you guys like this content, give me a thumbs up. If you haven't subscribed yet, please subscribe. And thank you for listening. This is Finding Value.